Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top performing small caps from today. So first up is ticker symbol IGC. Huge move today, closed up another 44%. It's been on a sweet multi-day run. You have RSI at 93.91. So as you can see here, it topped out at this level in the past. This is maxed out pretty much for RSI. It doesn't get much higher. 100's maxed out. You have a bearish crossover on Fasto. Notice how the black line crossed over the red line to the downside. That is a sell signal. Now you have plus DI on ADX way up here at 77. Above 40 is frothy, so at 77 that's really pushing. You've got a climax spike today. Look at the volume bars down here. As they're increasing, there was the big spike here, but yeah, today's 119 volume it is a signal that it's a possible climax spike. That's what it's looking like right now. You never know, they could push it higher. It did form bearish 1, 2, 3 gap ups reversal pattern yesterday. There has been, and that pattern still yet to be confirmed. There has been 1, 2, 3, 4, 5 gap up opens in a row. There is an unfilled gap between high of day yesterday and low of day today. A drop down to EMA4 at 903 would fill that gap. So yeah, so it's at 1149 in after hours trading, so it is trading lower. That was the risk holding overnight, would be a potential gap down open, similar to over here where it got ahead of itself and got above that upper Bollinger Band. There was a gap down. As long as it holds EMA4, it can keep pushing higher. Once they let it close below EMA4, that's when it could come down and possibly fill this gap down here between high of day on this candle and low of day on this candle. A drop down to right around 475 would fill the second gap. So that's the risk in the chart of these unfilled gaps. Okay, if we look here at IGC on the 15-minute chart, you could see here that when it broke below the 70 on Fasto, that was a red flag. That signaled it was cooling down. Same thing with the drop below 80 on Fasto, or this is on RSI. That was signaling it was cooling down. And the drop below 80 on Fasto signaled it was cooling down as well. You could see down here it had the crossover, the bear cross, as the chart was pulling back, but then it had a bull cross into the close. Notice the PSAR bear flip, the dots were below, and then they flipped above, and then you can see in the close they flipped back below. So the chart really heated up. It pulled back and it hit our target, the green line here, the 50 simple moving average. Also, the candles have been bouncing off of the lower Bollinger Band. That's this purple line right here. Notice the top of the Bollinger Band, and then it came back to the lower Bollinger Band, bounced. You know, it came from the top of the Bollinger Band, hit the lower Bollinger Band area, bounced. Same thing here, you know, it was up here at the top and then ended up retracing down, hitting that lower Bollinger Band, and then it hit that 50 simple moving average and was able to hold that level. Now tomorrow it needs to stay above 1269. Trading right now at 1149 is a red flag. It's going to need to get back above that level. What you want to watch closely tomorrow is this 50 simple moving average at 1031. If it drops below that level, that's where it could consolidate. That's where it could come down, fill the little gap here. A drop down to this level right here would fill the gap. Right around 925 or so would fill that gap. And then the risk is if it dropped below the bottom of that gap is a drop to the 100 simple moving average at 779. To the upside, what it needs to do is break above the high close horizontal resistance level. That's the closing price here at 1230. If it can break above 1425 and close above that level, that's going to be a signal that it wants to keep pushing higher. Okay, let's look at IGC on one more chart here. This is the monthly chart, and it does have RSI here at 95%. It's up 100% for the month, so congrats everybody, because we're only 2 days into the month, so this has been an incredible month so far. But it's very, very frothy here at 95 on RSI, Fasto at 88. You have plus DI starting to hook here. You could see it had huge volume last month, and this month's followed with giant volume as well. 2 days of volume, nearly 200 million shares have traded. This month's candle is pushing up here and hitting key resistance from between 2008 and 2011. And so right now the key level to break is the September high close from 2010. And so that's this red line right here. And so when I first looked at it, it was at 1243, but now it's lower than that. It's at the 1149. So who knows where it's going to be at? But the bottom line is this is right about $12. And so what it needs to do is close above that 12 level for the month. month, and that would signal it wants to head higher. Otherwise, it could find resistance here, and it could pull back into the bands, and the risk is that it drops back down to the EMA 4 at $7 down here, $7.09. $10 was a support zone back here in the past, and so you'd want to see that level hold. If it broke below, the downside risk is it runs down to 7, which wouldn't mean that the chart was broken. EMA 4 is at 7. The chart's still super strong. It's just getting a little bit ahead of itself. Okay, let's look at David's T here, ticker symbol DTEA, closed up 63% today. Huge move. RSI is at 65, Fasto's at 62, so it still has some room to run, but you notice how it tops out at this level, so it's rare for it to get above 70 on RSI. We'll see if it can do that. Now, Fasto down here at 62 is interesting because you can see here a couple times it's gotten above 80. It did pull back on these occasions, but it was able to stay above 80 for an extended period of time during this run. So this could be the next push higher. We'll have to see. That was huge volume today. Many times when you get a big volume spike like this and it's pushing hard after a pullback, I mean that could be signaling that people are loading and they want to take it higher. A lot of times volume will precede price. You could see how people did load down here. You know, you had this big spike from the pullback, and so now it's trying to break out higher. The big key today is going to be staying above this blue line here. That's the 300-day simple moving average. If it could stay above 385 and then break above the next level, which is the 449 400-day simple moving average, that 450 level, that would be super bullish. That would put this 5 zone on deck. That was the open from back here on the what is that, the 21st, and then you have this 530 540 level, which was the high, and so it's going to be all about getting above 450. Before it can do that, though, it needs to break above June high close horizontal resistance. You can see these candles here all closed right at this level, and that's right where they closed it at today. I think that's like 415. They maybe closed it at 416 today. It's going to be all about staying above this level, 415 and above, breaking 450. The big volume spike is very interesting. That one red flag is there is an unfilled gap between high of day yesterday and low of day today. It would be much better if that was not on the chart. There was a close today above the major moving averages, the 50, the 100, the 200, and the 300-day simple moving averages. Today, the bullish kicking pattern that formed back here on this white candle, that pattern was confirmed today, and so the bullish pattern was confirmed with the white candle today. And then on the weekly chart here, this is interesting. You have RSI at 58, so there's a lot of room to run until the overbought levels. Fasto at 62. You have plus DI at 37, so it's not at crazy levels. This week, there's a break above the middle Bollinger Band, which is at 326, and then also above the 50-day simple moving average at 359. Those are the two levels to close above for the week. Notice it's also that the 50-day simple moving average is the top of this multi-month, multi-year channel now. You've got the bottom here and then the top, and so right now it's busting out of the top of the channel. If it can stay above that 360 level for the week, that's going to be super bullish, signaling that it wants to head higher. And then what you're looking for is a run up here to this 100-week moving average at $5. It's going to have to get ahead of the get above the November high close here at 450. That's going to be a big level to break, and that would put 5 on deck. Notice how 5 was big support back here in 2017. That's going to be a tough level to bust through. Notice the huge volume here. You know, very small volume before, huge volume, and it's heating up. That's usually a good sign they're going to take it higher. Okay, now let's look at InBev. So InBev did close, ticker symbol NBEV. It did close down 18% today. The drop below 70 on our side, that is a red flag, and the drop below Fasto on below 80 is a red flag as well. It can't maintain above those levels, as you can see. It doesn't stay above for very long. Now it pulled back into the bands. Notice how the candle yesterday got well above the upper Bollinger Band, similar to here, and then the candles work back into the bands. That's what's happening right now. It hit EMA 4 at 679. It needs to hold that level. Right now, last time I checked, it was at 677, so that would put it below EMA 4. Below EMA 4 would be a red flag because there's an unfilled gap between 650 here and 575, and so a drop down to 575 would fill that gap. You might see a pullback and a bounce off of EMA 8 at 589. That would be bullish if it could hold that level and then get back above EMA 4. If that breaks, EMA 13 held on the other pullbacks, and so that would be the big level down here at 512. You'd want to see that level hold. If that were to break, then the chart would be broken. You know, it'd come down possibly to that middle Bollinger Band. If that EMA 13 holds, that would be another good level for a technical bounce. If EMA 8 failed to hold, or if it didn't, if it doesn't bounce off of one of the levels that I just mentioned above. And then to the upside, what has to happen is to get above this high close horizontal resistance level, right around 780 or so. And then now it's all about the $9 level. That's the close the close from yesterday, and that's going to be the big level to close above and turn into support. Once a stock stops closing above, making new high closes, that does signal downside risk. If you look here, it formed a bearish Harami reversal pattern. So we'll be on the lookout for bearish reversal confirmation. And then also take a look quick at the InBev weekly chart here. You can see this week it's above the closing price from back here in May. That's going to be the big level to stay above for the week, 675. You want to see it stay above 675. It's at 677 right now. The risk is if it drops below the 675 level, it could consolidate and then come down here and test EMA 4 at 544. The chart would be really bullish. It's just look at this week's candle. It's above the upper Bollinger Band. That's unsustainable. So you're likely to see the candles work their way back into the bands. Let's look here at the monthly chart. The monthly chart has the same type of scenario where it's pushing above the upper Bollinger Band. There's no unfilled gap. It's a monthly chart, but it's all about staying above this key level right here, right around 575. That's the closing price from back here in May of 2017. If it could stay above 575 and close above that level for the month, that would be very bullish. So keep an eye on 575. And then finally, let's look at the 15-minute chart for InBev. And you can see here, it had the gap down here. So there's a gap between high of day on the 28th, and then the low of day here on the 1st. And so the risk is that it comes down here and it hits this green line, which is right around, I'm calling it 575. That may not be exact, maybe 577 or something, and fills that gap. That is the downside risk. Right now at 677, that's keeping it below the 50 simple moving average, below the middle Bollinger Band. And then what it's doing is it's dropping it below support at 2 o'clock, or from back here on the 1st. And so that would bring it down here to the top of the gap, which is at 640. And so it needs to hold that 640 level. Just below that is the 100 simple moving average at 618. It seems like if it gets down here in these 640, 620 level, it's likely to just come down and finish the job and fill the gap. And if it fills the gap, it might, a lot of times they overshoot. And so look at the 200 simple moving average at 549. That's a big support level. And if they really overshoot, the 300 simple moving average is always a nice reload level. If support holds and it bounces off that level, then many times you got that good entry point for a technical bounce play. Okay, let's look at OGEN here. It closed up 123% today. So congrats, everybody. That was a monster move. It was down in after hours trading. Let's see, I guess the last time that I checked, it was down around $3 in after hours trading. And so you can see here at RSI at 91, so it was pushing super hard. This is very, very high for the stock, for any stock to be at 91. 94 on Fasto. You have plus DI at 75. So it's just at these levels that are unsustainable. It's on a multi-day run here. You can see all the white candles in a row, a 5-day run. And today, a bearish 3 gap ups reversal pattern did form, the multiple gap up pattern. And so that does signal it's getting ahead of itself. You can see the upper Bollinger Band is down here at 218, and so being way up here at 357, that puts it well above that upper Bollinger Band. What you could see are the candles work back into the bands at $3. That's putting it right around here. It's still above the 400 and 300-day simple moving averages. They're going to be the big levels to hold. If it drops below 269, the blue line will be on deck. That's the 300-day simple moving average at 217. Now that it's above that level, it needs to stay above. It would be a major red flag if it dropped below. There is a gap between high of day yesterday and low of day today. You could see a drop down to 190 to fill that gap. Okay, check out the increasing volume bar pattern with the 98 million shares traded today. This is what we call a climax spike. And so during a multi-day run, you need to look out for signs that the stock is likely to pull back the next day. And that's what the setup is here. And then trading lower and after hours trading is signaling that our intraday analysis was correct. You know, we were putting out alerts in the chat to lock in gains on this into the close, and we did put out alerts in the chat that IGC was going to be a risk to hold overnight, and yeah, so we do a lot of technical analysis in the chat, a lot of putting out alerts before the close, at the open, middle of the day, just trying to look out for everybody and help you succeed and teach technical analysis at the same time. All right, thanks for viewing this video. If you'd like to learn more, please come check out the premium chat. When you get there, please send me a direct message so I can get you in. All right, thank you.